Have you ever felt like you're just gambling in the stock market? You throw your money at a big name you've heard of and just cross your fingers, hoping for the best? Well, today, we're going to trade that hope for a toolkit. We're about to become stock detectives, learning how to uncover a company's true value, not just its flashy up and down price tag. So, you ready to crack the case?
It's the big question every investor asks themselves, right? Is this all just pure luck, or is it actually a skill that you can learn? Well, I've got some good news for you. It is absolutely a skill. It's a methodical process that, honestly, anyone can learn, and it all starts by asking the right kinds of questions.
So here's our game plan, our case file, if you will. First, we're going to learn how to invest beyond all the hype. Then, we'll dive deep into a company's financial DNA. After that, we'll crack the company code using some really cool tools. And then, we'll uncover the story behind the stats. And finally, you'll be ready to put all those clues together and officially become a stock detective.
Okay, first things first, we have to learn to tune out all the noise. The stock market can be a really chaotic place, right? You've got prices jumping all over the place based on rumors, a single tweet, or just the drama of the day. But as stock detectives, we're not interested in the chatter. We're looking for the truth, the company's real underlying intrinsic value, and that is our very first clue. This right here is our #1 investigation technique, fundamental analysis. The best way to think about it is like a doctor giving a company a complete physical. We're checking all its vital signs, its financial health, where it stands in the market, the whole economic environment it's operating in. The whole point is to figure out its true worth, not just its price on any random Tuesday. It's the difference between knowing the price of a car and knowing its value. So where do we actually start looking for these clues? Well, we go straight to the source. We're going to examine the company's financial DNA. These are the documents that hold all the secrets to its actual health.
This financial DNA is spelled out for us in 3 key documents. And you want to know the best part? Publicly traded companies are legally required to share these with everyone. This isn't some secret insider information. It's the foundational evidence, and it's available to any detective who's willing to take a look.
First up, we've got the income statement. Seriously, just think of this as the company's report card. The story it tells is pretty simple. It shows the money coming in as revenue, the money going out as expenses, and then what's left over at the end, the bottom line. So do they make a profit, or are they in the red? It's really the most basic measure of success. Next up, the balance sheet. Now, if the income statement is like a movie playing out over time, the balance sheet is like a single photograph. It's just a snapshot of what the company owns, its assets, and what it owes, its liabilities, on one specific day. And the difference between the two is what's left over for the owners, which is the shareholders' equity. And just like the scales of justice, it always has to balance out.
And finally, we have the cash flow statement. Now, this is where the rubber really meets the road. Why? Because it tracks the actual physical cash. See, earnings can sometimes be manipulated with clever accounting, but cash in the bank, that is a whole lot harder to fake. This statement tells us exactly where the cash is coming from and where it's going. It's an incredibly powerful tool for any stock detective.
So now we have our evidence, right? 3 documents just packed with numbers. But what in the world do they all mean? Well, to find that out, we have to crack the code. And our special code-breaking tools are what we call financial ratios. Each one of these ratios is like asking the company a direct question. The PE ratio asks, hey, are you a bargain right now, or are you way overpriced? The debt-to-equity ratio asks, are you totally drowning in debt? And the return on equity, or ROE, asks, so how good are you at actually making money with the money we investors gave you? These questions are what turn all those numbers into real, usable answers. Now, it's really important to know that all of our detective work is focused on fundamental analysis, but there is another approach out there called technical analysis. Think of it this way. Fundamental analysis is for the long-term investor, the detective who's digging for a company's true value. Technical analysis, on the other hand, is for the short-term trader, kind of like a fortune teller trying to predict the next price swing on a chart. They're just 2 different jobs that require 2 totally different toolkits. But here's the thing. The numbers only tell part of the story. A truly great detective knows that you have to look beyond the spreadsheet. You have to understand the bigger narrative, all those qualitative factors that you can't really put a number on but are just as crucial to a company's long-term success. So what are these qualitative factors? Well, we need to be asking questions like, how does this company actually make money?
Who's in charge here? And are they any good? What's their secret sauce? Their competitive advantage. And what's going on in their industry as a whole? These are the questions that give all those numbers some much-needed context.
Leadership is, well, it's everything. You can have the most brilliant business model in the world, but if you have the wrong people at the helm, that ship is going to sink. It's why we always investigate the captain and their crew. Just look at a company like Enron. It looked amazing on paper, but it was rotten to the core because of its corrupt leadership.
And that brings us to this idea of an economic moat. It's exactly what it sounds like. Just like a castle's moat protects it from invaders, a company's economic moat protects it from its competitors. This could be a legendary brand like Coca-Cola, a game-changing patent, or maybe the ability to make things way cheaper than anyone else. A wide moat usually means a safer investment.
All right, let's bring it all home. We've got our tools, we've learned the lingo, and now it's time to actually solve the case.
Here is your 4-step process. Step 1, gather your evidence. That's the financial statements. Step 2, decode the clues using our key financial ratios. Step 3, analyze the story behind the numbers by looking at those qualitative factors. And finally, step 4, put it all together and form your own conclusion. What is this company really worth?
And this is the moment of truth. This is when we take our hard-earned estimate of the company's true value and we compare it to its price tag out there in the market. So, is it a bargain or is it a total ripoff? That, my friends, is the million-dollar question.
We've given you the tools, we've shown you the way. Now, you are the detective. So, what's it going to be? Which company's story are you going to investigate first? The case is officially yours.